As crazy as this is to say, we're almost done with the month of January in 2023. So what I wanted to do was cover the three things that I'm seeing happening in the real estate market, as well as how they're trends for things I'm going to continue tracking for moving into the rest of the year. So the first thing I'm going to cover is right now, buyer demand is low, but rising. And what I mean by that is, starting really in September of 2022, we started to see a dip in buyer demand, which kind of shifted the real estate market we've been experiencing over the past 2 years. And with that little lull that was happening, we kind of were dealing with some different market factors. But what we're starting to see ever since November is interest rates have started dipping again, which has started to get the buyer pool a little more active. And I really started to see that in January. So with interest rates going down, which is helping out with affordability, we're going to see is that something that's going to continue going on and going to be a trend into the next year. The second thing I'm seeing out there is that sellers are motivated. Compared to the past 2 years when sellers were able to list their house and get multiple offers on that house within a weekend, now things have started to slow down a little bit and days in market are increasing. And a lot of times the people who were listing their house over these past few months, and will probably be listing in the next few months, are motivated to get out of their property. So what that's doing is creating them to be in situations where sellers are actually giving some sort of a concession. Actually, I found a stat that said 41.9% of homes in the fourth quarter of 2022 had some sort of a seller concession, whether that be them giving away some seller credits so that the closing costs were lower for buyers, or things like inspections where they're actually doing an inspection and negotiating ways for the buyer to have things fixed before they moved in. Those things were happening because sellers really wanted to get out of their properties and were willing to do what it took. So once again, that's kind of helping out the buyer pool out there and giving them a little bit more negotiating power in terms of the dynamics to make sure that they're getting a house they like, since they're not in these multiple offer situations. And the third thing that I'm kind of tracking against is the relationship between inventory levels and interest levels. So the third thing I'm going to be tracking against, and I think is going to be the big determining factor for the 2023 market, is the relationship between inventory levels and interest rates. What we saw over the past few months is that inventory levels have remained relatively low, but with interest rates having their quick shoot up that they had over the 2022 season, we've now had a lower buyer demand pool. But with November having that decrease in interest rates and it continuing on the way into 2023, we're going to see which one of these breaks first. The inventory levels have been low historically, and that's really created the market we've been in. But if for some reason there were to be a change in the interest rates going back up again and buyers once again take a step to the sidelines, and we have our traditional spring market where more homes are hitting the market, we may now have the first time where we have the highest inventory we've had in a while with less demand. And that could create an environment where we actually see for the first time level, if not slightly decreasing home prices, which is going to drastically be a difference from the past market we've been in. Now, alternatively, if inventory levels kind of stay where we are and we don't get a surge of those, and at the same time we continue the trend of interest rates going down, we once again may see that buyer rush happening, and although a lot of people were thinking it might not happen, we might have another competitive spring market like we've had over the past few years. So what's really going to be a determining factor is how those two have their relationship together. I have my own thoughts on what's going to be happening over the year of 2023, but whichever happens of those two scenarios is going to be largely the dictating factor for the spring market all the way through summer and winter, where you once again go back into lulls. So we might have a theme that's either very similar or very different than last year's. So I track this stuff a lot, and I think that monitoring it as closely as you can will give you the best picture of what you can expect for the next few months, as well as all the way through the end of the year. So I hope you found this helpful. I'm going to continue updating everyone on these types of things, but at the meantime, just know that the real estate market is getting ready to ramp up for that traditional spring market, and there are some things going on that you need to keep tracking. So let me know if you have any comments, or if you have a question that you wanted to know, you can always reach out to me directly, and we'll talk to you again soon.